Insurance isn't just about planning for life's worst-case scenarios. Instead, think of insurance as your financial plan's safety net. Having the right insurance in the right amount protects you and your family from unforeseen events and provides a crucial baseline financial cushion. It's one of the most important aspects of your overall financial plan, designed to safeguard your progress and provide peace of mind. Below, you will find descriptions of different types of insurance that are most common and most critical to your financial success and safety. Life insurance. About life insurance is designed to replace income lost in the event of a death. The two basic forms of life insurance are term and cash value. But it's recommended that individuals purchase a term policy that guarantees coverage for 10 to 12 times their current income. Everyone with dependents needs a policy, even stay-at-home parents, to ensure their family's financial stability in their absence. Important vocabulary. Life insurance agent. Professionals who help you find the right policy by evaluating your individual circumstances and life insurance needs. An independent life insurance agent is not tied to any one insurer and works to get you the best policy at the best possible price. Beneficiary, the recipient of a life insurance policy's death benefit. This can be one person, several people, or an organization, as determined by the life insurance policyholder, and is often the main reason people buy coverage. A beneficiary must file a claim to obtain the benefit. Claim. Submitting the necessary paperwork to get the life insurance payout is called filing a claim. It usually requires proof of the deceased's death and proof of identity for the beneficiary. Death benefit. An untaxed lump sum that the life insurance policy pays to the beneficiary upon the policyholder's death. The death benefit amount is considered the face value of the policy. Experts recommend a death benefit 10 to 12 times your income. Face value. The amount the policy is worth and what is paid out to beneficiaries upon the policyholder's death. The face value is also known as the policy's death benefit. Insurance policy. The written contract between the insurance carrier and the policyholder. The insurance policy details who is covered, the term length of the policy, and under what conditions the death benefit will be paid out to the policy's beneficiaries. Insured. The person for whom the life insurance policy is covering. If the insured dies, this will cause the death benefit to be paid out to the designated beneficiary or beneficiaries. Typically, this will be the policyholder, but is not always the case, i.e., one spouse is the policyholder, but the other spouse is the person being insured. Term. The period of time a policy is in effect. For example, a policy could provide coverage of $250,000 for a 15-year term. Takeaways. Purchase term insurance for 10 to 12 times your annual income. Use an independent agent to shop for the best prices for you. Ensure that the term is sufficient to meet your financial goals, self-insured status. Health insurance. About medical bills from catastrophic injuries or illnesses, bankrupt people all the time, so health insurance is essential to a well-rounded financial plan. Common insurance options include a PPO, Preferred Provider Organization. When considering a health insurance plan, opt for a PPO if possible. It is accepted by more doctors and hospitals, typically requires no referrals to see a specialist, and usually provides out-of-state coverage. Not to mention the formulary, list of covered prescription drugs, is often much larger, meaning there will be a better chance that your prescription medication will be covered. An HMO, Health Maintenance Organization, is another common option. HSA health savings account plans can also be a good fit depending on your needs. Less common plan types include EPO, Exclusive Provider Organization, and Point of Service Plans, POS. The type of health insurance you choose is largely dependent on your life and financial circumstances. For individuals who don't have access to an employee-sponsored health plan, health sharing plans might also be an option. There are also two basic health plans which include ACA, Affordable Care Act plans, and non-ACA compliant plans. Important vocabulary. ACA Platinum plans. These plans cover 90% on average of your medical costs. You pay 10%. ACA Gold plans. These plans cover 80% on average of your medical costs. You pay 20%. ACA Silver plans. These plans cover 70% on average of your medical costs. You pay 30%. Premium. This is the amount of money you pay for your health insurance coverage, typically on a monthly basis. Coinsurance. Coinsurance is the sharing of costs by your insurance company and you for covered services after you've met your deductible. Coinsurance is usually shown as a percentage. For example, if your coinsurance is 20%, that means you'll pay 20% of covered medical expenses after you've met your deductible, and your insurance will pay 80%. until you reach your out-of-pocket limit for the benefit period, usually a year. Copay, copayment, a predetermined fixed rate you pay for certain healthcare services at the time of care. For example, you may have a $50 copay every time you see your primary care physician, or a $55 copay for each urgent care visit. Deductible. A health insurance deductible is the amount of money you pay out of pocket for healthcare services before your insurance plan starts contributing significantly to the cost. The deductible does not include coinsurance, charges over the allowed amount, amounts exceeding any maximum, or expenses for non-covered services. Out-of-pocket max, out-of-pocket limit. The out-of-pocket amount is the maximum dollar amount you pay for covered services in the plan, year before your insurance plan pays 100% for covered services. The out-of-pocket limit includes your deductible and coinsurance. Takeaways. Your health insurance should reflect your overall health needs. Purchasing health insurance from your employer is by far the best option if it is available. Non-ACA health plans are typically less expensive and may offer different options. ACA health plans are guaranteed issue and don't require underwriting approval, meaning you can't be denied coverage based on pre-existing conditions. Non-ACA health plans do require underwriting approval and you can be denied coverage. Disability insurance. About disability insurance is a type of insurance that will provide income in the event a worker is unable to perform their work due to disability. This income replacement can be crucial for covering living expenses when you can't earn a paycheck. Takeaways. Protect your greatest asset, your income. A long-term disability can be financially devastating without this coverage. Understand the difference between short-term and long-term disability policies and assess your needs. If available, maximize employer-provided disability benefits, but consider supplementing them with a private policy for more comprehensive coverage. Long-term care insurance. About long-term care insurance pays for medical care given in a nursing home, assisted living facility, adult daycare center, or your own home. It covers care that assists with activities of daily living, like bathing, dressing, eating, up to a lifetime maximum or for a certain number of years, which is typically not covered by standard health insurance or Medicare. Takeaways. Protect your savings and assets from the high costs of long-term care, which can quickly deplete a retirement fund. Plan ahead, as premiums are typically lower when you purchase coverage at a younger age and in good health. Understand the types of care covered and the policy's benefit period and daily monthly maximums. Auto insurance. About vehicle insurance is insurance for cars, trucks, motorcycles, and other road vehicles. Its primary use is to provide financial protection against physical damage or bodily injury resulting from traffic collisions and against liability that could also arise from incidents in a vehicle. It's legally required in most states. Takeaways. Auto insurance is mandatory in most places. Ensure you meet your state's minimum liability requirements. Consider coverage beyond the minimum, e.g. collision, comprehensive uninsured motorist, to protect your own vehicle and yourself. Shop around for quotes regularly to ensure you're getting the best rates, as premiums can vary significantly between providers. Homeowners insurance. About homeowners insurance is a form of property insurance that covers losses and damages to an individual's residence, along with furnishings and other assets in the home. Homeowners insurance also provides liability coverage against accidents that occur in the home or on the property. Takeaways. Homeowners insurance is a form of property insurance that covers losses and damages to an individual's house and assets in the home. The policy usually covers interior damage, exterior damage, loss or damage of personal assets, and injury that arises while on the property. Every homeowner's insurance policy has a liability limit, which determines the amount of coverage the insured has should an unfortunate incident occur. Homeowners insurance should not be confused with a home warranty, which covers repairs to systems and appliances, or with mortgage insurance, which protects the lender. Renters insurance. About renters insurance provides some of the benefits of homeowners insurance, but does not include coverage for the structure of your home, as that is the landlord's responsibility. Renters insurance protects your personal property in a rented apartment, condo, or house from unexpected events like theft, fire, and more. Renters insurance can cover the repair or replacement of damaged or stolen items. It also provides personal liability insurance for financial protection against covered liability claims and lawsuits brought by others for accidental bodily injury or damage to their property while in your home. Takeaways. Renters insurance is often very affordable and provides crucial protection for your belongings, which are not covered by your landlord's insurance. It also provides liability coverage, protecting you if someone is injured in your rented home or if you accidentally cause damage to the property. Take inventory of your possessions to ensure you have adequate coverage for their replacement value. Identity theft insurance. About identity theft insurance is a type of insurance policy that provides financial protection for victims of identity theft. Coverage varies between insurers, but identity theft insurance generally aims to cover costs associated with the recovery process after you have become a victim of ID theft. This can include legal fees, lost wages, and expenses for credit monitoring and fraud resolution services. Takeaways. Identity theft is a growing concern. This insurance helps mitigate the time and financial burden of recovery. Understand what specific services are covered, such as credit monitoring, fraud resolution specialists, and reimbursement for certain expenses. While it doesn't prevent identity theft, it offers peace of mind knowing you have support if you become a victim. Legal expense insurance. About legal protection insurance, also known as legal expenses insurance or simply legal insurance, is a particular class of insurance which facilitates access to law and justice by providing legal advice and covering the legal costs of a dispute, regardless of whether the case is brought by or against the policyholder. This type of insurance helps make legal services more affordable and accessible. Takeaways. This insurance can make legal advice and representation more accessible and affordable for common personal legal matters. Review the policy to understand what types of legal issues are covered, e.g., wills, traffic violations, family law, and what limits apply. Consider if the potential cost savings on legal fees outweigh the premiums, especially if you anticipate a need for legal services. Insurance is one of the most complex and important aspects of your financial plan. We covered a lot in this video. Please take the time to review it again if necessary. Be certain to write down any questions you might have for your coach and have them addressed during your coaching session.